Good morning, ladies and gentlemen, and welcome to the MJ Gleeson PLC full year results investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged. They can be submitted at any time via the Q&A tab that's just situated on the right-hand corner of your screen. Please just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so, and these will be available via your Investor Meet Company dashboard. Before we begin, I would like to submit the following poll. I would now like to hand you over to the executive management team from MJ Gleeson PLC. Graham, Stefan, good morning.
Good morning.
Morning.
Thanks very much, Jake. So I'm Graham Prothero, Chief Exec of MJ Gleeson, and I'm here with Stefan Allenson, CFO, and this is the Gleeson's presentation for our final results for our year ended 30th of June 2023. And thanks very much for dialing in to listen. So if we jump straight into the presentation, we'll canter through this at a bit of pace and allow plenty of time for any questions that you may have. So if we jump onto that first slide, Stefan, the quick overview from me, and then I'll hand over to Stefan to take you through the financials. And then I'll come back and give you a little bit more detail on operations and strategy and our outlook. So Gleeson Homes has had, I would characterize it as a robust performance in an interesting year. We started the year as a fast-growing house builder, but one pretty much exclusively focused on the first-time buyer market, and one that didn't allow our homes to be sold for rent. So you could see that we were vulnerable to the twin challenges of the end of Help to Buy, which happened in March, and the spike in mortgage interest rates, which obviously took place something like a year ago today, I think. The first of those we'd obviously seen coming, the Help to Buy point. Nobody foresaw the mini budget, but we reacted quickly. We've changed a lot, and I think the team has done very well, shown great resilience, and we've achieved in the end what I describe as a moderate sales rate across the year. Some periods stronger, some periods weaker. And we were pleased to supplement that with a group's first multi-unit sales. There were 115 completions in the total. We'll talk about that briefly. We took advantage of the quieter market, that less intense build period that you'd seen for a couple of years prior, following in the post-pandemic period. We took advantage of that to restructure the business. And that was both about right-sizing the group for the market we were facing into, but much more importantly, restructuring the business to take advantage of the growth opportunities that we see lying ahead of us. We also focused hard on our build quality and customer journey. I think both of those, we'd lost a little bit of ground on both of those again through that intense period in 2021 and 2022, when anybody in the market will tell you it was as difficult to build houses as at any time in living memory. First, shortages of materials post-COVID, and then just shortages of labour as volumes were pushed so high in 2022. So that made things very tough. As I say, we lost a bit of ground, I think, in the quality we were delivering, not to any significant degree, but certainly needed a bit of attention. We've made huge strides on that in the last 9 months. I'm delighted to say that in the first 3 months of our current financial year, the business is trading at a strong 5-star quality. We were also early signatories to the New Homes Quality Code, and that's working very well for the business. So overall, we're viewing the future with confidence, and we do see a clear route to building 3,000 homes per annum in the medium term, and significantly more beyond that. Over in Gleeson Land, the demand, pleased to say that the demand for our prime consented sites does remain strong, despite what you may read in the headlines. There is some more caution, particularly among the larger house builders, but they're still very much in the market for sites of the quality that we bring in the areas of high demand where Gleeson Land operates. That we're seeing a little bit of caution, a little bit of increased caution, which extends their due diligence, and they drag their heels a bit, obviously, so that they don't have to part with the cash quite so quickly. But very definitely, we are still seeing the majors, and we're also seeing an increase of regional home builders who are taking the opportunity while the majors step back a little bit. The regionals are actually filling their boots with the land opportunities. So no shortage of demand for the land and still good pricing. We did sell 3 sites in the year. That could very easily have been 6, but 3 examples of exactly what I'm saying around a bit of extended caution. One of those sites that we had expected to sell in the year to 23 has actually already sold in 24. And amidst the hurly-burly of all of that, we also took the opportunity to extend our bank facility in what I would describe as a skeptical banking market. Stefan and the team did a great job. We received very strong support from our existing lenders, and that again was about putting the balance sheet in good shape to take advantage of the growth opportunity we see in front of us. And so just turning then to recent trading, which I guess is the slide that might get most focus of everything we show you. Difficult to disentangle over the last couple of months what is normal summer, the normal summer distractions from fundamental market weakness. But we are definitely seeing a weaker market than this time last year. Gross reservation rates down by 15 to 20% year on year, and cancellation rates pretty much stable, so that what we're actually seeing is net reservations, the important number, down by about 20%. But looking across the market, I think 0.43 sales per site per week probably at the upper end of what you're hearing from most of our peers. But we believe it should be higher than that, and we have a number of initiatives that we're pursuing very proactively right now, because we believe we have levers that we can pull that will improve our sales rate, whatever happens in the wider market, the wider economy. And that's to do with improving the product, the homes that we build. And we're delighted with our new ranges, and we'll talk about those briefly. We have refreshed our marketing to address a broader demographic, some important factors to think about there. We will be bringing a shared ownership offering to market. We don't currently have one, everybody else does, and that will bring a stepped increase in our sales rate. We already have a long list of customers who are waiting for that, and we will explore further multi-unit sales over the course of this year, just so that that's appropriate, and we'll keep our sales rate where we want it to be. So at that point, I will pause and hand you over to Stefan to talk through the numbers. Stefan.
Thank you, Graham. So as Graham said, we're actually pleased with the result this year. It was a robust result. The group delivered operating profit of £33.6 million. That was down significantly on the prior year, but the fall in profits in Gleeson is probably lower than most other house builders, and we are confident that we will at some point return to the strong growth trajectory that this group has previously delivered. We saw net cash reduce this year from 33.8 million to 5.2 million. There's a very good and deliberate reason for that, and I'll explain that when we come to look at the balance sheet. Very briefly, by division, Gleeson Homes profits, operating profits for the year were 35 million. Gleeson Land operating profits were 1 million. And I will turn to the divisional profits now. In Gleeson Homes, we sold almost 14% fewer homes during the year. 1,723 homes were sold, but we sold them at a significantly higher price. So the average selling price, the ASP, was up 11.3%, and that was driven very significantly by underlying selling price increases. So those of you that have been following Gleeson Homes for a few years know that we had a bit of a price gap with where the market for house prices were, and we've been closing that gap, and that 7.6% was driven a little bit by underlying house price increases, but also closing that gap. As a result, turnover was down only 4%. Now, if I break down the gross profit and overheads a little bit further, gross profit fell by just under 11%, and gross margin was lower at 27%. And that lower gross margin was the result of build cost inflation, the increased use of incentives, although we're really not using incentives excessively, or we certainly weren't in that year, and extended site durations. So in this slower market, we are expecting to operate our existing site for much longer than we had previously anticipated. So the fixed costs that one has on operating on these sites will therefore be higher, because those fixed costs are largely driven by time. Overheads increased by 12% to £51.8 million, and we'll touch on this a little bit later, but we undertook a restructuring of the Gleeson Homes business in the second half of the year. Now, we had principal reason for that was to put in place a more robust standard operating structure that will allow us to more smoothly grow the business, but we also achieved some cost savings. So we took 3.2 million out of the annualized cost rate run rate that we had in the first half of the year. So as a result, Gleeson Homes delivered 35 million operating profit. Margin was down to 10.9%, and ROCE also down at 16%. Now let me turn to the forward order book. So we had, and it's worth taking a step back here. So in 2020, at the end of 2021, calendar 21, we made a very deliberate decision to slow down the release of plots for sale, and release them for sale later in the house build process. So when we were further progressed with house build, and that was very deliberate. We wanted to improve the customer journey, but also take advantage of the house price increases, the very significant house price increases that we had been achieving. So obviously you release a plot later for sale, house price is a little higher, so you sell your home for a little more. And that was very successful. But it did mean that we started the beginning of last year, with a lower forward order book of only 618 plots, whereas a year earlier we had a forward order book of 841 plots. Now the consequence of that was that when the market suffered a very severe slowdown in September following the rather disastrous Truss Kwarteng mini budget, that meant that we had a proportionately or relatively lower forward order book, which meant that volumes in the second half of the year were significantly impacted. Now, as part of that, as a consequence of that slowdown, all house builders started to take action, and we were not alone in doing that. And we paused land buying and we stopped site opening. So we didn't open any more sites, none in the second half, and actually none in the second quarter of the year. So that meant we opened fewer build sites than we were expecting. So you can see on this slide that the number of build sites fell from 87 to 82. We did continue opening sites that for sales that we had opened in the previous year. So you can see that the number of sale sites actually increased from 61 to 71 sites. So we were selling on 71 sites at the end of the year and building on 11 more sites than we were selling on. Now, what you'll see this current year is that that number of sale sites will fall, because of course we opened very few sites last year, but the number of build sites will recover, and we expect to have, we say, between 80 and 85 sites at the end of this year. I would like to think we're towards the upper end of that, but the average number of sites that we're selling on this year will be 63 compared to the 68 sites that we were selling on last year. But that 63 sites is the same number of sites that we were selling on in financial year to June 2022, a year when we sold 2,000 homes. If I look at the pipeline, so what is the pipeline that allows us to return to our strong growth trajectory, which we're very confident we will do? Well, whilst we paused land buying, it didn't stop us continuing to agree land purchase agreements. And you'll know that one of the very attractive and unique features of our business is that we start building on sites as soon as we acquire them, but we agree to purchase sites on a conditionally purchased basis. So that means we enter into contracts with landowners. We then submit planning applications for planning permission on our terms, and we only purchase the site, actually take legal title and make payment, once we have acceptable planning permission on terms that we like. So we continued growing the pipeline in the year, and you'll see that the number of owned plots in the year fell from roughly 8,500 to just under 7,700. And that's because while we were continuing to agree site purchases, we didn't actually purchase that many sites last year. Now, if I look at Gleeson Land, the business actually had a successful year in terms of achieving planning permissions, but it only sold 3 sites on behalf of Gleeson Land's clients. So Gleeson Land, you will be aware, I'm sure, that doesn't own any land. It simply promotes land on behalf of other landowners, and it takes unconsented land to residentially permitted land, which typically will increase the land value from an average of £10,000 an acre to £1 million an acre. And Gleeson Land takes a healthy but modest fee for its services, and when it sells sites, it's selling on behalf of those landowners. So in that sense, it doesn't have any land value. Not really, doesn't have any land value risk. It also has quite a small balance sheet, so its return on capital is usually very strong. But in the year, only sold 3 sites, and those 3 sites, the reason it only sold 3 is the major house builders were very cautious in their land buying following that Truss Kwarteng mini budget, and planning continued to be congested. Planning system continued to be congested, and whilst we were quite successful, it slowed the whole process down. As a result, Gleeson Land delivered £1 million of profit. Now, let me turn to the balance sheet. And there's some numbers in here, and two in particular, forgive me, I will draw out. The first is the Homes division, Gleeson Homes WIP. So that's the work in progress, the build WIP, the amount of money we've invested on a site. That increased quite significantly by £57 million to £214 million. Well, 30 million of that was a deliberate decision that the business made almost 18 months ago to invest early ahead of new building regulations that changed on the 15th of June this year. Now, those new building regulations add about £5,000 per home to our build cost and to every other house builder's build cost. By investing £30 million, we were able to start the construction of 2,000 more homes than we would have started, and that saves us £5,000 for each of those 2,000 homes. So that's a £10 million saving in our costs for the homes we're building over the next few years by investing 30 million a little bit earlier. Now that 30 million pounds will unwind over the next 2.5 odd years, but that 30 million investment was the cause for our cash balance to fall from 33.8 million to 5.2 million. If I look at cash flow, the principal number here that leaps out for you is the cash generated from operating activities. It's negative 9.6 million. That's because the group's working capital was an outflow of 46 million. Well, typically there is a working capital outflow. We are a growing business, and even though we have quite a low operational gearing that allows us to grow without consuming a lot of cash, without increasing our working capital heavily, we do typically have a working capital outflow, but we have always had an operating cash inflow. This year is the one exception, and that's because of that 30 million pounds we invested during the year in anticipation to smooth the transition to new building regs. Now, if I turn to dividends, we are declaring a final dividend of 9 pence per share this year. That brings to 14 pence the total dividend for the year. That dividend will be covered 3.06 times, and that is within the company's capital allocation policy, in particular its dividend cover policy, which we stated 2 years ago. We will pay a total dividend of between 3 times, and that will be covered between 3 times and 5 times by earnings. So 14, we intend to maintain that dividend cover policy, and 14 pence was the highest dividend that we were able to pay whilst maintaining that policy. Now, our intention is we wish for the dividend to be progressive. We would like to pay a higher dividend each year, but we are a growth business, and whilst we wish to pay a healthy dividend, we also wish to ensure we have sufficient cash to finance the very exciting growth opportunities this business has. So expect a progressive dividend policy, but one that will be constrained by that dividend cover policy of between 3 times and 5 times. Over to you, Graham.
Thanks, Stefan. Turning then to operations and strategy, and before I get into operations in detail, just a word on the sustainability agenda. And I'm pleased to say we are well focused and well structured in the right across this agenda. There's much we could talk about, but I've just drawn out a couple of points on this slide, which highlights for me. So it is and remains the core purpose of the group that a couple on the government's national living wage can afford to buy a material proportion of the homes on every one of our developments. That is, as you can see, absolutely aligned with target 1 of UN SDG 11. and it's both it's something that's close to the heart of not only the board but every member of the Gleeson team, and that's because we're proud of it. It's a profoundly sustainable purpose. It's also an excellent commercial proposition, and so very, very important principle for us. Slightly newer news is the second point on the slide there, which is that we have recently announced that we are committing to a science-based target. We've been accepted by the SBTi, and we will be agreeing and publishing those targets within 24 months, and I think you can expect that we'll do it well inside that timetable. We're well on with that exercise. So more we can talk about. I'm happy to take questions a little later, but just moving on, conscious of time. I'll skip through this. We can talk about any of this, as I say, under questions if you'd like. But what we're seeing, customers, I would characterize it as still really adjusting to the higher cost of buying. It's really more about, in my view, confidence and settling to the fact that the asset, the home, is structurally more expensive to own than it was. Interest rates are higher. They're not at all-time highs, and the asset, as I hope to show you in a moment, does remain affordable. Particularly a Gleeson home remains affordable. But what's unsettling customers at the moment and causing hesitation is actually the continuing volatility. And I have every hope that the action we saw from the Monetary Policy Committee yesterday might be the start of some stability, and we might get to the place whereby interest rates finally start to subside away from the headlines, because it is the continual speculation on whether rates are going up or going down that unsettles consumers and gives them that hesitancy from taking the big decision to move house, to take on a new mortgage. First-time buyers are undoubtedly inhibited by the loss of Help to Buy. You're seeing that right across the market, but we've been delighted to see a wider demographic buying our homes, and that's really a key to our confidence going forward. Prices remain firm. We are obviously, as Stefan said, making use of incentives, but nothing that would scare the horses. We're probably currently running at an average level of about 3% of selling price, and that says to me we've actually got more ammunition in the locker if we need to use it. But headline prices, we're not seeing any pressures from either customers or indeed from banks' valuers to reduce those headline prices, and that's a good thing. Mortgage availability remains good. As I say, to me, it's more about the volatility in the headlines around the rates of those mortgages, but there are plenty of mortgages out there for our customers. Build cost inflation, uneven. We saw 3 to 4% during the year, probably more in products than materials, and our prediction, our expectation for calendar 2023 is that we will see the cost of materials and labour that go into building a Gleeson home. We think that will overall reduce by between 3 and 4%. Why is that different from what the nationals are, the majors are telling you? Well, that's because they build nationally, and undoubtedly the labour market in the north has eased more than in the south, and we are beneficiaries of that. So whilst materials some are up, some are down, undoubtedly our labour costs have eased, and that's what will drive the saving that we will see during the current calendar year. The politics and the planning and politics remain tedious. Planning as congested as ever, but we are good at that at Gleeson, and the key for us there is to plan for difficult planning, i.e. not to overcommit our capital until we're sure that the planning is in place. And yeah, disappointing outcome from the CMA market study. They will continue to rumble on, but I hope that they will eventually conclude what the previous 4 studies have concluded, which is that the problems lie in the planning system and not with house builders. Nutrient neutrality also rumbles on, and again, just an example with in the last couple of weeks of how the real issues of getting homes built in the country continue to be subjugated to grubby politics, with the parties fighting each other and playing politics with each other. So the proposed relief on nutrient neutrality, which was set out by Gove and Sunak 2 weeks ago, was accepted by Lisa Nandy for Labour, who said yes, we'll vote for it. 5 minutes later, up pops Angela Rayner, who decided to have a bit of a game and switched Labour's support to opposition, and that was it. That was that solution was dead in the water, excusing the pun. So there we go. We'll carry on. If we can go to the next slide. So Gleeson Homes, and as we both said, we were pleased to deliver 1,723 homes in the middle of the range that we indicated in February, and that was supported by the 4 multi-unit sales. We'll talk about those, but the first multi-unit sales that Gleeson had done, only 115 completions in the year, so not a massive proportion of the total, but a useful contribution to our revenue. The piece I just would pull out on this slide is that second bullet around the change in demographic. What we saw is that as first-time buyers hesitated, reduced to just 50% actually of the homes we sold in the last 6 months. That compares with the previous level of 80% and above. So you can see a significant shift, but that gap was filled by a much wider demographic. So over 20% of our sales were to customers over the age of 55. That's double of the previous proportion, and similarly an almost doubling of cash buyers who now represent 10%. And that's all driven by the relative affordability of our product, the slightly improved quality, which is a very deliberate step we've taken, and starting to see the benefit of marketing to a wider audience. If we can turn on to the next slide, please, Stefan. Thank you. Just touching on the restructure, what we did, as I say, 2 elements to it. It was partly about right-sizing the business for a more constrained market. So we dropped from 9 regional businesses down to 6. We're covering the same geography, no reduction in that, but we're doing it with fewer teams, but much more importantly, this was about standardizing our business such that we're putting us in a place whereby we can confidently grow going forward. And that's really, if I can characterize it as changing from being a very large small house builder in the way that we were structured, much more to being a small volume house builder. That's what we now look like. Our regions are standardized, they work in a standard way with the specialist teams at centre, and we're confident that as we grow, that will maintain the quality of our product and the quality of our customer experience right across from Mansfield to Manchester to Middlesbrough. But through all of that, importantly, that core purpose and our business proposition remains unchanged. A customer on the national living wage can afford to buy a material proportion of the homes on any one of our developments. So moving on, and that's really that core proposition as set out on this slide. And I would just draw your attention to one aspect. If you look at the chart on the bottom right, for an average first-time buyer buying a Gleeson 3-bed home, their mortgage payments represent just 26% of their take-home pay, which compares to a UK average of 39%. A Gleeson home remains highly affordable. Moving on, so a number of things that we've done to help us address that broader demographic. So we have worked hard over the past 18 months to refresh our product. That means that we've just elevated the quality such that these homes are now highly competitive and not only representing great value, but instead of being on the previous iteration, they were absolute lowest cost. But you could tell the difference between a Gleeson home and the rest of the competition because it was lowest cost. And what we've done is just slightly elevate the quality of the interior. We've actually improved, in our view, the appearance of the exterior, and that such that if you took the label off, a Gleeson home would now compare very favourably with any of the relevant competition, and that means that we can appeal to a wider demographic. So if you took a typical couple who may be looking at, say, an average 3-bed from one of the majors, a Bellway or a Taylor Wimpey, they may have been priced out from that offer by the step up in mortgage rates. They may have come across to Gleeson and said, great, we can afford this Gleeson 3-bed. We'll take it, but it just feels a little bit cheaper than the Bellway home we were looking at. That is now not the case. They would move very happily into the equivalent Gleeson product, but as I say, at the materially lower cost. So we're excited for the opportunity that gives us, and that attractive product therefore enables us to access the wider customer demographic. So it's now important that we take that product to that wider market. I showed you just now the broader demographic that had been buying Gleeson homes. That's almost in spite of us continue. We principally focused our marketing on first-time buyers because that was our core market through those 3-4 years into 2022 when we achieved 2,000 units per annum. It was absolutely appropriate that we targeted and marketed to the first-time buyer because there were more. We had a surfeit of first-time buyers. We didn't really need to address any other audience. But our product, particularly now that we've refreshed it, is actually suitable to a much wider audience and therefore appropriate that we broaden our marketing as well. And we're excited by what we can achieve if we actually go out and market to that wider audience who's begun to find their way to our product, even with our narrow marketing. And just to share with you what that might look like. So we are, if you look, these are before and after propositions. So toning down the kind of brighter, shoutier colors that you see on the left to the more neutral, slightly more mature proposition on the right. We're broadening the cast of characters in our imagery, as you can see in the lower picture there. And perhaps the most telling example is our signage, whereby if you drove past that site, the image, you could be forgiven for thinking, well, the people those rather nice looking homes are built for are the smiley, young, fresh-faced first-time buyers. Well, we very much welcome young first-time buyers, but we also welcome second-time buyers, downsizers. Anybody can benefit from a Gleeson home, and it's vital that we don't either overtly or subliminally encourage or discourage any particular cohort of buyers, and hence we've gone to that slightly more neutral proposition. It is just about to be rolled out, and we're excited by what that can achieve for us. So a number really important that, as I said before, whilst the market remains quite difficult out there, I do think, my own view, I think the wider market, as things calm down in terms of interest rates, the wider market likely to begin to recover itself and gain confidence. So we will see that potentially in the autumn. We'll see the effect of yesterday, but possibly more likely in the spring. Much more important for me are the fact that we have a number of levers that we can pull for self-help. These are things that we can do which will improve our sales rate, whatever happens in the wider market. So I've talked about our marketing. I've talked about our excitement for the refreshed product. We're also training an intensive program of retraining our sales teams. Unkindly, I could say they haven't had to sell a house for 7 or 8 years. They've just been taking the orders as people queued up. Well, now we're having to fight for those sales. Really important that we're on top of our game, and so we're working hard to retrain our teams. We're also looking hard at our processes and our compliance with those processes to make sure that we're capturing every lead, making sure we return every phone call. We don't drop the ball at any point in that chain. We've also removed the restriction on renting our properties, so that if customers want to buy a property to let, we will do that. And I think that's an important evolution. It doesn't change our proposition, but just again make sure we're marketing to the widest possible group of customers. A number of discipline around show home opening. We're making sure that our show homes are ready and open as soon as we start to market those sites. And we are bringing, as I said before, a shared ownership offering to market from next month. So a number of things that we're doing which will improve our sales rate, whatever happens in the wider market. Finally, on homes, we do see an opportunity in the partnership sector. So what do I mean by that? That is where we work with partners such as, and you can see three types of typical partners on the right. So Carlisle and Gatehouse, what they are is private institutions looking to invest in the private rent properties for private rent. Bradford is obviously a typical local authority who are looking to acquire stock, and housing associations, Live-In and Castles and Coasts, who want to buy again stock in bulk. These all three of these are people to whom we made the multi-unit sales during the period. Now, those multi-unit sales are not partnerships transactions. Please don't think I'm confused by the two. Those are bulk sales to liquidate stock in a market when the private buyer is slightly more hesitant. But we were very careful in making those multi-unit sales to choose partners whom we were certain would share our values. So the communities we create, we're very cautious as to who we will sell multiple units to, and we're very confident in all of these partners. The other criterion we're looking for was that these are people who would like to work with us going forward, perhaps on more structured partnership style deals. And indeed, we are having conversations with these and others. What do we mean by that? And typically that would represent a kind of structured part forward sold, forward funded transaction whereby we might enter a site, a large site, and sell forward part of the development, but we would build that into our planning and appraisal for the development such that we would be prepared to accept a lower margin on the houses delivered to, say, Carlisle or to the housing association, and for that they would then share with us the costs of entering that site, so the land purchase and the infrastructure to open up the site. So changes, improves our risk profile, improves the return on the site, and that's why we'd be prepared to accept a slightly lower margin on the part of the site that we forward sell. So a very interesting potential additional route to market for Gleeson Homes. We're exploring the opportunity. We're not committed to it, but we do believe that it gives us an opportunity to accelerate the growth of Gleeson Homes. Turning quickly to Gleeson Land, we've covered most of this in the earlier slides. We did sell 3 sites during the course of the year, and as I said, the lack of supply in the very high demand areas where Gleeson Land operates is supporting strong demand for those sites. We do have an excellent pipeline of sites coming through, and we're confident for FY24 and going forward. We have a new managing director in the business, Guy Gustafson, and he has lost no time in setting out an exciting strategy to grow this business based around increasing our coverage in our existing heartlands of the southeast and southwest, and growing our coverage into the northern home counties and the Midlands. And we're doing this by expanding our boots on the ground, but also by developing market-leading research and data analytics capabilities, which help us both in identifying appropriate sites to promote, and also where there is a bid. It's an important part of our strategy to win in competitive bids. So just some stats on these slides. I'll pass quickly through them, but we did achieve 6 planning consents during the FY23, which sets us up very nicely for the current year, and significantly we're not afraid to take sites to appeal. So of those 6 sites that were granted permission in 23, no less than 5 of those were won at appeal. A really impressive track record. It's really a very high quality team that we have in Gleeson Land. And finishing on just some other stats, which you can on the next slide, which you can refer to at your leisure, but you can see a very strong pipeline, some 18,000 plots to bring through. And so just turning quickly to the summary, as I say, important that we implemented a successful restructure. We are cautiously and carefully managing our further investment in sites, but Stefan and I are committed to getting that the number of sites up in Gleeson Land, in Gleeson Homes, because that's how we will grow the business, by having sufficient outlets, and we do want to be ready for the recovery when it comes. But we've also got our the ability to put the brakes on if the doldrums continue for longer than anybody expects. Gleeson Homes expect to improve our rate of sale by pulling levers in our own control. This is not waiting for the wider market, and that, as I've shown you, is around the improved product offering, refreshed sales and marketing, and we'll continue to be agile with the incentives that we use. We will be launching our shared equity offering, and we will deploy 1 or 2 further multi-unit deals. Strong pipeline in Gleeson Land, and still strong demand. So we're confident that we have potential to scale up both of these excellent businesses, and we do believe there's a clear route to 3,000 homes per annum in the medium term. And at that point, we will be happy to take your questions.
Graham, Stefan, that's great. And if I may just jump back in there, and thank you very much indeed for your presentation this morning. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab that's situated on the right-hand corner of your screen. But just while the team take a few moments to review those questions that were submitted already, I would like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Graham, Stefan, as you can see there in the Q&A tab, we have received a number of questions throughout your presentation this morning, and thank you to all of those on the call for taking the time to submit their questions. But perhaps, guys, if I may just hand back to you just to make your way through those questions, give your responses where it's appropriate to do so, and I'll pick up from you at the end. Thank you.
For sure. So the first one, I'll just be very brief, because I think I've covered it during the presentation. But you're absolutely right. We were very careful about the partners we did to make the multi-unit sales. We had a number of others that we didn't pursue, and that's because we want to, as I say, ensure we maintain the quality and character of our beautiful developments. And so we worked hard to make sure that those partners would be aligned with that. But the other benefits that you refer to are really around the potential to continue working with those parties on a more structured basis, whereby the slightly inefficient character of bulk sales, which is really shifting homes that you'd plan to deliver in the open market. If you're working in a more structured partnership arrangement, you can plan that exit, that part forward sale right from the start, and that affects everything from your layout on the site to the nature of the homes that you build, right, your build route. It just massively improves efficiency and returns. So absolutely, we see other benefits arising from selecting those partners. Typical question here: what does a typical promotion agreement include, and what what protections are you afforded? Typically, we will pay a fee to the land vendor to take that site on. That fee will not be refundable, but it will be deductible from what we when we come to work out the maths. Once we've successfully achieved planning, we will then get credit for the fee that we've paid. And what that will do, it will give us a period of maybe 5, maybe 7, maybe even longer years in order to promote that site through the planning system. The protections that we're afforded are that we have exclusive right to promote that site, so we're not wasting our money. We're not risking that we do the work and somebody else then gets the benefit. And the only risk is that we get time expired. So that's why it's important that we set ourselves that the fee we pay gives us the right to promote that site through the planning system for a good long period, depending upon the time we expect that site to take to get through planning. And then what happens is that once planning is achieved, we then market that site and we sell to the generally the highest, but the most appropriate, most reliable bidder, and we then receive a fee or a proportion of the sale price as if you like, our reward for the successful promotion. So that's how that works. But we are protected through that process by that exclusivity. Delays in the planning process. Do I see this improving? And what can be done to make the process more efficient? I would just distinguish two elements to that. So the delays that are affecting us right now are not to do with the wider politics. So the delays that affect us now are basically to do with under-resourced planning departments, and that means that and also the perpetual situation that basically the local democratic process means that everybody has a say in every aspect of the development, right down to what bushes you plant outside the show homes, and that means that it is a long and tedious process, taking us on average 15 or 16 months to get a homes, to get the planning permission we need to put a spade in the ground. And that has been the same for 2 or 3 years. It just means that we have to plan for that to be a long and difficult process. It's pointless me whinging about it. We have to get on with it, but we are good at it. The political piece that you see more of in the headlines is a wider and longer term challenge, and that's around the fact that this government in particular has subjugated the important demand for need for new homes in the country to grubby politics. And the key there is Michael Gove has removed targets from local authorities. He describes it in any number of ways to suggest that he hasn't removed the targets, but in effect he has. The consequence of that is if local authorities have no obligation from national government to provide homes or to provide land to be developed for homes, then the natural consequence is they won't do that because their own voters will vote them out. Nobody wants homes built in there where they can see them. We all know that the country needs homes. Nobody wants them built in their backyard. And so if there isn't a law or a regulation forcing local authorities to provide land for homes, the natural consequence over a number of years is that they won't provide that land and we won't build any more homes. So that needs to change back. It was a critical and appalling step that they took. It was for political ends and it needs to be reversed, but I doubt that it will be reversed until we get a new strong government. Just looking at a question on the target of 3,000 homes, and the question is, does that include partnerships or will they be on top? Let's be clear, if partnerships were not part of the of our proposal, we anticipate that we could readily achieve 3,000 homes in the medium term. So we would achieve that with open market sales, but I anticipate that much sooner than that, partnerships we will start undertake some partnerships transactions, and that those should accelerate our move towards achieving that 3,000 homes per annum. So I wouldn't commit to a particular proportion at a particular time, but the 3,000 target was open market sales, and you could look at partnerships as being additional to that or accelerating that target.
Graham, Stefan, if I may just jump back in there, and thank you very much indeed for being so generous of your time then addressing all of those questions that came in from investors this morning. And of course, if there are any further questions that do come through, we'll make these available to you immediately after the presentation has ended, just for you to review, to then add any additional responses, of course, where it's appropriate to do so. And we'll publish all those responses out on the Investor Meet Company platform. But Graham, perhaps really just before looking to redirect those on the call to provide you with their feedback, which I know is particularly important to yourself and the company, if I could please just ask you for a few closing comments just to wrap up with, that'd be great.
Indeed. Yeah, look, thank you very much for listening this morning. As I say, we're facing into uncertain markets, but we are very confident at Gleeson. Because of the huge demand that we see in the affordable market that in which we operate, we're confident both in the short term that we have levers we can pull to improve our rate of sale in the current market, and we're excited by what we see in the medium term. Phenomenal growth opportunity, probably the most exciting growth opportunity in the sector. And we have the tools, the structure, and certainly the appetite to take advantage of that. So we're very excited, and as I say, thanks very much for listening to us this morning.
Graham, that's great. And thank you once again for updating investors this morning. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback in order that the management team can better understand your views and expectations. This won't take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of MJ Gleeson PLC, we would like to thank you for attending today's presentation. That now concludes today's session, so good morning to you all.